going to get the big numbers. I think we're live now, though. I think it's a really weird thing. Like, my access to the YouTube channel is screwed. So now the duck is sitting there on his broken internet, clicking the go live button, giving me the stream key, the whole thing. But it seems to be working, so not all is lost. Chat, hello. I assume things are functional. Flary Reuter says AV is good. Well, there you go. That's all
that really matters.
That's all that really matters. You can see I've taken the liberty, Mayne, of creating a title and making promises on your behalf. Like, you know, the whole meme about socialism is like how it's easy to spend other people's money, or like being charitable with other people's money. It's like the same thing here. I've decided you're going to teach us all how to trade. You kind of have to do it now.
If people didn't gather from that last video I was on, I totally know what I'm doing.
Yeah. I mean, just full on, fully confident, high conviction.
Exactly.
Yeah, so that's, you know, it's Casual Friday. We keep it casual. It's Friday. Good old Don is working through some internet issues, which is fun. You can see the man is just the the luckiest person in the world with how everything's been developing recently.
You could say he's a lucky duck.
He is a yeah, he's a lucky duck. So
I'll see myself out.
Yeah, thanks for coming on. He's still working through some stuff. So good old Trader Mayne volunteered to come and teach us how to trade. And of course, shout out to Blockfolio for making this happen. Mobile trading app, the only moral and ethical way to shill crypto to your family and not feel terrible about it, because the UI and UX experience is so good. Like, I literally gave my sister shitcoins. And I was like, well, you know, you're going to hold them from like 6 months to 5 years since I have like no idea where the midterm is at. And, you know, if it dips, just maybe buy more. And worst case, they become these pretty decent collectibles if the value of the coin actually goes to zero.
I saw the basket that you had shilled them. It looked pretty good. I think you made some good bets.
It's not bad, right? It's like a blue chippy kind of, this will probably stick around in some way, one form or another type of cryptos. So FTT, BNB, the big exchange coins, Solana, because it's like basically a Sam coin, ETH competitor, and then ETH itself because ETH, you know? So I felt pretty decent about that. Have you shilled like crypto to your family? Do you give them like spot alt recommendations or something?
So I have I started an email chain, and if it wasn't like so badly like doxing myself and like, you know, family and friend members, I would have posted it on Twitter for clout and for the fact that my email chain out-traded my actual self. I sent an email. I started it in November of 2018. So when we had that first kind of crash to 3K, I basically wrote this big intro email, like what is crypto and why I literally said in the email why I think this can go to 50K in the coming years.
Damn.
And I wrote all these examples about, hey, past market cycles, we drop 80% from the high, blah, blah, blah. Do your own research, high risk, high reward. Here's how you sign up. Here's where you can buy. Here's what I would buy. And I was like Bitcoin, Litecoin, Ethereum, kind of just the big three. And telling them everything step by step. And I updated it all the way from 3K to 14K. Then during COVID, I sent an email basically saying, buy now. Like when we had that big dump, I was like, if you miss the first chance, this is your second chance.
How many
like,
people are on this list, by the way?
Probably like 40.
Damn,
so it was like most of my friends, family, like who I posted on my Instagram. I said, if you're interested in this, let me know. I'll include you on the email. And I probably sent out about 12 emails. And then I posted the COVID email. And then the next email I sent was at all-time high. And the next one was at 40K. And the next one was at 60K. Like, it was actually incredible how well it was done. If I traded that well myself, I wouldn't be here right now. I'd be on an island somewhere because I would have not overcomplicated it as I have trying to be a day trader.
Oh, mate, yeah, I've been vastly out-traded by Technical Roundup, like the newsletter. It's not even close, like, especially on altcoins, it's just ridiculous.
And it's because you're not looking at it every day, right? And that's what it was for the email, too. It was like a forced way to be patient because I would only update it every couple of weeks. And I'd go, oh, that daily chart or that weekly chart I was looking at, now it's playing out. But when you're in the screen every day and you're like watching the intraday charts, you fuck yourself out of so many good positions.
You've taken like 50 trades within that weekly candle.
Yeah, I mean, I've been out traded by Crypto Tunes for just buying Theta and Doge, right? And just waiting, and I mean, it is what it is, I guess. But yeah, that email did very well. But the only people who listened were my dad and my mom. They each bought one Bitcoin, and they split it between Ethereum, Litecoin, and Bitcoin. So 33% each, and they've both done like 15x plus on their initial investment. It's insane.
I think they've outtraded most of us, to be honest, mate.
Yeah. So
it's at a weird point though, right? Because like a lot of people are finding fundamental kind of reprieve or like some sort of validation. They're like, oh, my theses were right. But it's like Ethereum Classics like outperforming Ethereum, Bitcoin Cash is outperforming Bitcoin. I don't know, Dogecoin Dark might start outperforming Dogecoin soon. It's a bit of a weird spot in the market. Like it's almost like a not a confirmation bias, but it's like arriving at the right conclusion with really faulty logic. I think it's really scary in a bull market when weird stuff happens and you use those exceptional cases for like validation of holding a downtrend for like 2-3 years. I don't know. I feel like it can create some pretty shitty habits. It's like what I think about supercycle, right? Like even if there's fundamental merit to supercycle, most people are just going to abuse that and use that to justify shitty trades, bag holding, not getting invalidated, etc. Because they'll be waiting on this basically bailout that everything's going to go up anyway, so it doesn't matter. So even if the theory is correct, it's one of those things where maybe for your own good, you might want to ignore it, you know?
Yeah, it is interesting talking to Cobain yesterday on his stream. And he's talking about, he's like, yeah, investments in place that I made in 2017 are just coming to fruition now. And I'm like, man, it must be nice having that kind of, patience. Obviously, I think part of that comes with the bankroll, right? He doesn't need the 10x. If he can 3x a massive investment, like he's killing it. But yeah, no, it's the one thing that I'm struggling with now when I look at the chart and when I just kind of see the temperature online, even just the growth of my account right now. Like I'm gaining an ungodly amount of followers every month. I have so many friends and family members asking me if they should make like their first investment in crypto. Like, hey, bro, I know you told me to buy at 3K. What about now? And I just have a hard time shilling it at these prices, right? I'm like, we're up 20x. Like, could we go to 100? Sure. But that's only like a 2x from here. That's not even that crazy. So I part of me is like, dude, the music has to stop. But then I, hear guys like, Suzu and the Three Arrows Capital guys who are like, no, ETH is going to flip BTC. And I'm like, okay, maybe we're in for a wild ride. I don't know.
Yeah, it's a tough one. Like especially when the bull market's really aggressive and you're expecting volatility, shilling it to family members is like really scary. Because they start paying like an ungodly amount of attention to it as well. Like if I knew that my family members like wouldn't give a shit about like prices, then I'd be much more comfortable even with like mid-term stuff. But it's like what Loomdart was tweeting about. People just get sucked into the whole thing, and especially if you have like addictive tendencies and you get into markets for the first time and there's volatility, and dude, like it's a bit of a recipe for.
They're addicted and they've got like a few $1,000s in. Like, I have 95% of my entire existence in here. What are you talking about? I'm not even looking at the charts as much as you.
Yeah, no, I feel that. It's definitely a weird one, but up until proven otherwise has been the name of the game, and I'm waiting for that to be invalidated. Speaking of which.
Tried to big brain it a little bit the last couple of weeks with shorts, and it's just not gone well for me.
I mean, yeah, you can run us through that. You can screen share if you want. I think it's the present now button in the bottom right. One of the things that, I mean, obviously it was like a very busy stream and long and valuable, but getting into the nuances of like most people on there said that they traded like some form of price action, right? Now, like price action is maybe a deliberately vague phrase, because it basically means you have like some sort of discretionary manual system that's based on candlestick charts more often than not, right? Like the CT understanding of price action is like naked charting, support resistance, market structure, whatever, right?
Yeah.
Obviously you can do a million things with that. You can find people who call themselves price action traders do totally different things. In your case, like, what does it actually mean to trade price action? And then maybe we can even get into, like, a couple of the specific setups that you like or don't like.
Sure. So I think price action, like you said, it can mean a lot of different things. Someone who uses, head and shoulders and pennants and wedges, you could consider that price action. To me, price action is the umbrella term where your main decision-making process is just based off of the candlestick chart. So you're not really incorporating too many indicators or anything like that. While those can be valuable, like a guy who I love is Cold-Blooded Schiller, CBS, and he uses price action, but he also really kind of neatly mixes in RSI divergences to kind of really pinpoint his entries and target, kind of momentum shifts and potential tops and bottoms and things like that. And I find it, I would kind of still consider him a price action trader, even though he uses those kind of basic indicators. But as soon as you start getting into, you can kind of argue everything is price action, like Zoran Kohli, he uses Ichimoku clouds, but he still is using market structure and ranges and things like that to determine his actual entry. He's just using kind of Ichimoku as a way to help him, determine trend and where trend might reverse and things like that. But for me specifically, you could classify the type of price action trading that I do. I would probably say in the supply and demand realm. I call them order blocks because I was indoctrinated into the school of ICT very early on, before I knew any better. But it's supply and demand at the end of the day, right? So the whole idea of it is that, price is seeking areas of liquidity and that it moves from areas of, demand to areas of supply and vice versa.
That's way too intelligent, right? Given it's Casual Friday, the correct version is supply and demand trading is a small candle before big candle, right?
Yeah, the essence of supply and demand trading is what I'll show you right here. So when you're in an uptrend, the whole idea is you want to find essentially the origin of a move, and then you want to trade a return to that origin. So if you're watching, I wonder if this will work. So if you're in an uptrend, right? The idea is, okay, well, where did this last leg that then broke market structure here originate? Let's say it's around here. You want to look for a trade for the long side as price returns to the origin of the move, because it gives you a risk-defined entry, aka where your stop goes, right? Because if we go below here, good chance your idea is wrong. It could come down here and then go up. That's obviously part of the game, but that's kind of like the basis of my entire strategy. And you can look at it just on the daily chart, and you can see how often price will make a big move up, return to the origin of that move, and then move away again. You can do it again right here. This is the down candle that caused the up move. And the key for me is you want that up move to be one that generally causes a shift in structure. And so you can see here, this down move, this selling was the one that pushed price through this high and through this high. So if price comes back here, I'm not saying that it has to go to 70K from here, but there's a good chance that buyers will probably step in here. And this is enough of a clue for me that then I can either just enter based on the daily, or you can zoom in and you can start looking for one of your lower time frame setups to get involved within the area of bullishness. So we have that daily demand, that daily order block, that down move before the up move here. Now we're zoomed in on the hourly. So maybe what I'll do is I'll set an alert here. So now that we're in here, my entire goal is to look for a long setup in here. And now you've got your directional bias figured out. As simple as that. So if you're a scalper, right, or you're a low time frame trader, you've kind of eliminated any sort of bearish, right? Just because we broke a low here, that's only on the hourly. The daily, we're expecting a move up. So you're going to ignore this. You might actually treat this as a reclaim. There's your entry right there. Or you have your kind of order block inception, right? Your demand within demand. So we have a down move that caused a move up, right? That broke structure. We return to it, and there's your long. And it doesn't even have to be this one, right? It could be this one. Here's a down move that caused a move up, that broke structure. There's your return to the origin. And then we move up. And the reason we have confidence in bidding these levels is because of our daily premise is based on us being in demand, and therefore us expecting a bounce here, right? So as soon as you know that, on the low time frame, your field of vision should only be for bullish setups in this area. And it works the exact same in the opposite sense as well, right? So if we were to go find an area where we got to go way back to be bearish here.
A couple years, yeah.
Yeah. Do we tag it here? No, but I think this one will probably work. Same idea right here, right? So this is your up move before a move down, right? This is kind of the origin of this entire down leg. You could argue this is a down leg as well, an order block as well. They're not the thing about trading is one of the most common questions I get is like, how do you know it's going to work? You don't, right? You don't actually know if this is going to give you the reaction, because the other situation is this, right?
Yeah.
But based on, okay, we broke market structure here. That big high time frame directional change originated from this move. So I'm going to set an alert here. And if we come back to this area of price, I'm going to be looking for sells. Same idea as the kind of, previous area. You could sell here with your stop up here, or you can zoom in and see if it gives you a lower time frame entry. And the value of a low time frame entry, obviously tighter risk reward. And the exact same, this is what I kind of mean when price is fractal, is like you can look for the same types of patterns and setups on various time frames. So I don't know if I see a super clean one here. You kind of have an over under happening right here with this high. It's kind of almost like a really ugly inverse head and shoulders here, right? Over under, whatever the fuck you want to call it. But any of these kind of breakdowns that come back and retest one of these order blocks. So you have your point of origin of selling for the down leg. You have a move back up into it. That could be your sell. I don't think you get a retest of this one. I wonder if it looks cleaner on the H4.
Do you ever just smack it at the level itself? Like a lot of my best entries, like especially in the past like 6-8 months, all of my best trades have come from doing business at the extreme, where I'm not waiting for shit. I know the levels do or die, and like as soon as it starts even nuking through that level on that first test, I'll start buying it, because either I'm the wick or I eat shit, right?
Yeah, actually, so a great example of that is right here. So I have a monthly level, right? And you got a great short. Where's my thingy? You got a great short here if you were to just smack the level on a first test, right? Boom. So you have your high time frame level and you just short it, right? Because if you zoom in, that was literally the pico top before we sold off, right? And you could argue like, oh, it didn't come and retest like an order block or whatever. It did come and retest like a breaker, but to me, this is sometimes exactly what I'll do. Exactly as you said, I'll mark the level out. If it's a high time frame level, I'll just bid it or sell it, and then wait and see what happens. It's the way that you know that you have a good level is when you have a reaction like this, right? Like this is a super key level right here for Bitcoin. This is a monthly open and a monthly close, obviously. And we've come up into it. We had a big rejection off it right away. So you could make an argument that this is kind of your bias level for bullish and bearishness here.
Yeah, it is for me, that's for sure.
So absolutely, sometimes I'll just bid the level right away. My kind of strategy right now that's been working the best for me on Bitcoin is going to be directional bias based on the 12-hour or the daily. Sometimes I use the 12-hour just for a little bit more definition, but the daily is obviously, supersedes the 12-hour. And then my execution time frame has been on the hourly. So what I'll look for example, is what is my directional bias based on the 12-hour right now, let's say. So my most recent area of market structure, right, is going to be for longs. Because if you look here...
Also, you had a lot of shit price action in that range you're looking at now. It's been kind of rough, yeah.
So you could argue that this is kind of our 12-hour range. Maybe you want this, right? The reason sometimes using the daily or the 12 hours better, if you look on the daily here, that was just an SFP. So let's assume that we're using this as the range, and this is just a daily swing failure pattern that drove us down here. So when we come into the bottom of this range, my directional bias is bullish, right? Because I have a bullish range. I have a low and then a high, and then my anticipation is a higher low based on market structure breaking here, right? So I'll kind of walk you through it, I guess. Here's your low, that generated the last high, we've now broken market structure down, right? So here is your new low. Here's your new low. Here's the high before that low. We broke that low again, right? So now your market structure low is here, and your previous high is here. We've now broken market structure to the upside. So now my most recent high is here and my low is here, right? So all I'm doing is tracking market structure in a tight range, because to me right now, this is just a big range, right? Yeah. Like as much as we've moved like crazy, this is a huge range. I don't have a super discernible trend like here where I'm like, okay, I'm looking for a massive swing long. Here, to me, this is choppy as fuck. And like right now, to me, it's a coin flip. Like this could nuke down or it could go up. So I'm just trying to play a really tight range, and then I'm trying to take my trades in line with that range. So right now, this is my trading range, and it's a bullish trading range because we've made a new high relative to, our last swing high was here. We've broken market structure. So now I'm looking for longs. So where do I want to focus on longs? In here. And where do I want to close those longs, potentially short, is up here. And so this is just day trading, right? Because that's all I think you can do right now. I don't think you get in a swing trade here. I think if you longed here, absolutely, you're comfy as fuck. If you shorted here, you're comfy as fuck. But like to me here, there's no like obvious swing trade.
Mate, you can bet your pocket money though that I'm chasing the next Bitcoin breakout. Like it's at such a mental level right now, and it's been coiling for like weeks.
Of course,
I just needed to chat up, and then I move all my collateral into like FTT and just go away for a while.
Yeah, I think what's gonna happen here. I mean, so I'll just quickly say, here's your 12-hour demand. And then my hourly setup will be based on, I'm bullish in here. So what am I looking for? Well, there's your hourly return to origin, right? Within the 12-hour demand, I have my hourly order block. I'm bullish because we're in the 12-hour demand. We're in the lower part of my range. And there's my bullish setup. And what I'm seeing here is I'm seeing confirmation of my high time frame trend on the low time frame. Break in market structure, higher low, blah, blah, blah. And you're off to the races. But I think right now, this is kind of my guesstimation for what happens for Bitcoin. I think we're coming to tag. This here. So this daily demand, I think 61 to 63K. I would actually be very confident in if we get some sort of like big swing failure pattern in here, like above this high, or if we make a new high. So like, let's say price does one of these, like where it goes like this, and then a big swing failure pattern above a new high or above this high. I think that's actually such a strong short signal because your invalidation is there. And this is where it turbo nukes from. Like if this is going to 42K, like a bunch of people, including myself, have thought it might, I think it happens from here. And we see some sort of big ass quick sell-off from here after one. And this weekend would be perfect for it, right? Weekend price action bullish, one last big stab up, and then a breakdown. That would be a short signal for me. And then if we can break and close and hold above 60K, so if we don't get any sort of weakness in here, then yeah, probably going to 70, like at least. But I would much rather something like this to get long than
I just hate the idea.
Where we are right now.
I'm just inherently uncomfortable with selling a lower high where your invalidation high is the all-time high, right?
Of course.
Like purely conceptually in terms of structure, that's why I think a lot of the time the asymmetry in these sorts of markets, especially on altcoins, favors longs so much, like the closer you get to all-time high, because it tends to be a shitty level of resistance for the most part, right?
I agree. My biggest concern is just the level of momentum that's being lost here, right? And I'm only putting the RSI on just to show that the RSI, relative strength index, you can find here's a bearish divergence, right? Because we made a higher high in price, lower high in the RSI. All that this really shows is that momentum and the strength of the move is waning, but you can see that in price action, right? Each all-time high we've made has been consistently weaker than the last. So my whole kind of premise is that this last move is fueled not by really strong price action. Oh my God, how do I get this off my screen now? There we go. I gotta hide all my indicators. People will think I use them. My whole premise for us selling off is just that this move doesn't feel very strong. And I know that's like weird to say when we've moved 20+% off the low, like in literally 2 green candles. But it just doesn't feel very strong to me. Like I have just this weird itching suspicion that we do one more of these. Like that's kind of my entire thesis is we come and retest this. Like that's my ideal scenario, right? Just playing this as a big weekly range, one more rip to the low. But I'm prepared for anything. I agree with you. I don't really want to short Bitcoin with my stop here. What I'd much rather see is some sort of run of a high that gives me an invalidation that isn't all-time high.
Yeah, that'd be nice.
So if we get a swing failure pattern of this high, okay, then my stop is here. I'm selling the back test and then fuck it. Because yeah, I kind of agree with you. Like if it goes through all-time high, it goes through all-time high hard. It doesn't go through all-time high. In the other short scenario would be a repeat of this, right?
Right.
Where it went above all-time high, failed to have acceptance above there. I mean, that would have been a beautiful short if I wasn't drinking and watching that horrible Jake Paul fight. But it is what it is.
Yeah, calling that a fight is a bit of a yeah.
Yeah, exactly. I think it was my dad fighting a 20-year-old.
Yeah, it was a bag of milk and a TikTok.
Oh my God, his body was so funny. That would be another kind of short scenario, but I want to be long bias. I don't know. I have a very hard time trading up here, to be completely honest, because I need levels to work with, right? Like once we start going into price discovery, I'm like, okay, I'm just going to long any sort of dip to like an H4 order block. Like that's literally all I did for the past, however many months we've been in this fucking uptrend, like literally over a year now. Every single dip into H4 demand almost always worked out. And this is the first time where I'm like, okay, maybe we're turning around, but I also don't want to be that hero who's like, oh, I shorted the top because no one really gives a shit.
No, I totally agree. The thing is, like on the setup side of things, so almost just to summarize, a lot of the setup logic starts with fast moves, big levels that shift market structure, right? And a lot of the times you're trading the return to those key areas and then looking at lower time frame patterns to kind of mirror what you see on the higher time frames, like a bullish retest within a higher time frame bullish structure, right? In terms, and then also like to complement that type of setup, I'm just going to draw it on the stream really quickly. So I mean, the basic idea would be if you've got this high, right, you've got this low, and then you have a break which makes a higher high and a shift in market structure relative to the last one, you work backwards and see where did this market structure breaking leg come from, and you outline that area, and then should the market return to it, you're looking for lower time frame patterns within it with a market structure invalidation to give you continuation in the direction of the original impulse. So in that sense, the market structure logic of kind of high, low, higher high, higher low, it's complemented by the order block logic because that higher low area is where you find your entry structure. First of all, is that like a decently accurate summary of what you've said so far?
100%. And I mean, if you wanna kind of get the way ICT explains it, and I know it sounds corny as fuck with market makers and the elephant in the room or whatever. But the logic is essentially, okay, if I'm moving the market, right, how are you going to be generating the liquidity? I don't even know if that's the right word to use. But how are you going to be generating the up move, right? So the idea is the way he kind of frames all of his setups is how does a big player get long? Right? You need people to sell. So by moving price down, right, into that, what becomes that down candle, which is the order block, the idea is the institutions, in air quotes, are buying here, right? And that downward pressure is causing retail, which is you and everyone, to sell.
Everyone except him, right?
Yeah, everyone except him because he's on the inside. He has calls with the government and Goldman Sachs, and they want to know about his algo. It's crazy. But the idea is that they're generating liquidity, right? Because you need buy orders, right, to to get a buy order, you need to pair it with a sell order. Price moves away, and then as it comes back down, the idea is he's mitigating any orders that were missed, because to generate the up move, right now buying is happening, and then on the move down, the idea is they come and retest the order block to pair any missed orders before kind of continuation. So that's kind of the logic he has behind it. To me, I think that's just an overcomplication of a very simple concept, right? The whole crux of the idea is exactly what you said. If this is your bullish order block, right? What generated the move that caused the most recent shift in market structure? We're trading a return to that move. That's like the layman's casual Friday, kind of, and it makes perfect sense to me, right? Like, okay, if price moved from this origin, I'm going to be looking to buy a retest of that. If price sold off from, here, I'm going to look to sell a retest of that. And that's all you really need to work around. Anyone who starts trying to get into it with you being like, well, here's why, it's because they're pairing or blah, 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 that doesn't actually help you trade. Like, as much as it's like kind of nice to have this like explanation of why things work, or like why this area is sensitive to price, that's what people always ask me. They'll be like, well, why does it matter? Like, I'm like, why does it matter? Does it work? Can you identify them on the chart? Then just fucking trade them. Like, me knowing what's actually going on behind the scenes in that area of price does zero for me from a trading perspective.
Yeah, it's like a tricky one, right? Like, you want to understand, or at least have a functional understanding of market microstructure, but then it very quickly, if you follow the wrong advice, turns into 4D conspiracy theory type of like, they're out
it
to
turns
get
into
you
a
type of stuff.
24-month mentorship that costs $1,800. That's what it turns into. Like, and that was my problem with ICT's mentorship, is it got so into the weeds. And people always ask me, they're like, should I do his mentorship? 95% of what I used is in his like original free videos from like 15 years ago,
right?
Where he just teaches you what an order block is. He teaches you how to identify trend. And then he shows you the OTE, which is just pulling the fib. And usually your fib will line up with the order block, right?
Yeah, it's like, where does it make sense for a higher low to come in?
Exactly, and it's the whole premium versus discount, and this is in line with what Trader SZ does too, right? Like, Trader SZ, he's also a former ICT student, right? He just simplified it. You just take what you need. So I've learned a lot from ICT, but like, I've taken a few things that work, and that's fucking it. You don't need much else. And Trader's SZ's thing is very similar, right? Where do you want to buy if you're in a range? Well, you probably want to long either in the lower part of the range, or on a flip of the mid range, or flip of the range high. And that's the essence of the entire premium versus discount 3-month section of ICT's mentorship, right? Buy it if you're in a range, you want to buy the range lows, you want to sell the range highs. And the same thing goes for the order block, right? Just where's the move originated? So that's why I would look for a short here, because this is the first time we've had daily market structure. I don't know if you agree, but this is the first time we've had daily market structure shift bearish.
Yeah, it's certainly been a while, for sure.
Right? So this is the low that generated the most recent higher high. We've broken that. That shift happened here. So from a systems perspective, I have to look for a short here. If this was a 4X pair, I would have to look for a short here. The difference is this is Bitcoin, and if it wants to make a new high, it's going to make a new high at 70, and I'm going to get slipped, but it is what it is, right? So that's the whole logic. This is the move that caused this move down, so we look to short a retest. Simple as that.
Yeah, no, I think that's very helpful. Something we discussed to some extent as well. Hopefully my summary was useful for the audience. You can always go back and rewatch. I want to ask about like non-market structure continuation setups, which you've spoken about on occasion. So specifically, one of the things you said was regarding like reclaims at the extremes of a range, right? So for example, if you have resistance, range high, whatever, support, range low, one of the things you mentioned in terms of setups that you like, it wasn't this kind of market structure continuation where you have a higher high and it's a question of finding the higher low, or you've got a lower low and it's a question of finding the lower high. In this context, it was on the tweets I discussed with you via DM. It was about like waiting for some sort of like bearish pattern, reclaim, SFP or whatever at resistance to sell it down to support, and maybe doing the same at support, obviously the bullish version, to run it up to resistance. Is that like a different strategy? Do you do or pay attention to something else when it comes to price action above or below range extremes? How do you approach like non-market structure setups? Or, what can you teach us about those?
So my favorite non kind of order block setup, ICT calls it a breaker. All it is really is a level getting run, and then price showing you that it wants to kind of move in the other direction. It's very similar to what SZ would trade as a deviation, right? So for SZ, for example, join SZ's group if you want to learn about ranges too. He'll explain it 1,000 times.
He's only got 8,000 hours of like video.
Yeah. Oh my God. There's paid groups that are made based on learning shit from SZ. His whole concept, right, is if we're in a range, right, and we're trading, and then we have some sort of move above the range high, right? If we get a break back into the range, right, he's like, okay, this is a deviation that defines my risk. And, I'm entering on a kind of a back test or whatever, and I'm trading this back into the range because this is price showing me that we are not actually breaking out. We're remaining range bound. And this was effectively like a stop run. So the way that I trade it is using a breaker. And let's see if I can work on my drawing skills here. This is a very crude drawing, but the idea is this is usually going to happen either at a high or a low. And I'm looking for this low to be some sort of key high time frame low. And then this is the run. And then I'm buying the reclaim. And everyone's like, that's an inverse in head and shoulders. And it's like, well, every pattern that you see on a chart is just market structure and price action. And people are just kind of assigning a name to it.
Yeah, but that one is called the cred pump and dump. We all know it.
Like, this is the cred pump.
This is like the special one. It's different.
Yeah, because it like to me, when everyone's like, oh well, head and shoulders, you've got your neckline, right, and you sell once the neckline breaks, and your risk is here. And it's like, well, this part of the head and shoulders pattern means nothing to me, right? I've got a high, a low, a potential lower high, and then when I make a lower low, I now have bearish market structure. Like this is irrelevant, but if you want to include this and be like, haha, it's a head and shoulders, great, go ahead. But what really matters is market structure. And so what I'm looking for generally is some sort of swing point after an extended move to get run. And generally I want to see that swing point get run. And I'll show you one right here. So we have untested demand way over here, right? So we have this. This is probably owned by dope trades, by the way. I got to be careful what I say. Tested, untested. So you have this kind of little consolidation. I bet you, I'm sure if this is like a daily order block, there's an order block here somewhere, right? Where this hasn't been tested yet, right? So generally when we see the return to origin, we get a reaction. This one, we never actually came back to it. So the premise is we had a huge sell-off here, and we could potentially see a retracement or a bounce or some buying happen here. This would be kind of like a range low, right? Like if you have your high here and your low here, your high here and your low here, but it's at the extreme of a move. And what I look for is a swing point to get run. And so you have two here. You have this daily swing low here, and then you obviously have this swing low here run as well. And then what I'll look for on the low time frame is that breaker pattern that's running this low. And that is going to be my trade setup. So if I zoom into the hourly here, I don't know if the hourly actually gave me the setup. I think it had to be way lower. So this one's probably going to be a terrible example.
I mean, it's valid as soon as it gets above the high which preceded the lower low, right? Even
exactly. So the whole idea is you're trading. How do you get in this SFP, right? Well, there's a couple ways. You could trade the close, right? Like the Tom Dante way, I guess, right? So when is this SFP valid? On this candle close, right? You enter here, your stop goes here. How can I get in tighter than that? Well, what I want to do is I want to zoom in and I want to say, okay, where is the move that generated the actual SFP? It's this. So the whole idea is once we get above this high, like you said, the high that generated the low, now I can actually start looking for longs. I think if I go way the fuck down, you actually get a perfect breaker retest, or it might have cucked you by a few pips. So this would be your breaker right here. And so it just doesn't quite come and give you the retest that you want, but that's the exact concept, right? And so you have the high time frame swing low getting run, and then you have the low time frame breaker right there. So there's the move that ran this low, the reclaim, and then the move away. So that's this exact little thing that I drew out for you guys, the inverse head and shoulders. So the whole concept for me, and this is very similar to how SZ will trade a deviation, right? Is if price goes up and then trades back into the range, breaks the low, now there's bearish market structure. There's your risk. You're trading this back into the range. This is just an inverse of this or this. So you're looking for this to happen near key highs and lows. And you can do this anywhere on your chart. And the idea is very simple. This isn't really a market structure thing as much as it's basically trading stop runs. Exact same thing happened right here. You have a low that gets run. You can zoom in and you can look for that exact same pattern to play out at the level. And you see it happen right here. There's your up candle that caused the move down, right? And there's your reclaim, and then it moves away. So there's a setup in here. There's one over here as well. This one, you, depending on where you put your stop at, you probably get stopped out unless you put your stop below the low, right? So if you had your stop here and you entered on this retest, I mean, you're sitting in this for fucking ages, but so that's a way I'll trade reversals, essentially, is I'll be looking for some sort of high to get run. You can even do it on the super micro time frame. So this is an hourly swing high. Will it let me go back that far? I know there's a way to like zip around the chart. No, it's not gonna let me go back that far. I just don't know how to do it. Come on, there it is. So this is a perfect example. There's your hourly swing high that got run. There's your breaker. And this is that exact same deviation. If this is your trading range, right? That's your deviation. Well, how do you actually get in? Here's the move that ran that high. So once we break back down below and you can come and retest this area, that can be a sell-off. So what you're looking for in this instance is, kind of like you mentioned at the start, is it's happening at extremes of moves. And you can see one setting up right now. So you can argue.
Let me open up my broker. Hold on. Need to go all in the casual Friday call by trading
so
Mayne.
You can see this setting up right now on Bitcoin. If we sell off and we break below this low here that generated the high, you could sell a retest of the order of the breaker, right? You could sell this. Not saying that that's what's going to happen, but that's the exact short I took yesterday. I took a short based on this high getting run. We had the low that generated the high, right? Breakdown, came and retested. I shorted it. It didn't work. and I got stopped out. But that's the exact premise of the setup is playing out right here. We've got a liquidity run. We've got a breaker that is formed, and this is your head and shoulders meme. This is your range deviation meme. And this one's not so much based on market structure. It's more so just based on a trading pattern. Mm-hmm. And you can literally trade this on any asset, on any time frame. The key is having kind of 2 or 3 time frames that you want to focus on. You want to have the high time frame for the stop run, and then you want to have the low time frame for the entry pattern.
If someone wants to practice this, how would you recommend they do it? Because you tend to get answers at the extreme. They're like, oh, only go for the daily time frame, really clear ones. And then others will say, jump to really low time frames and grab what you can. I'm sure people have asked you in the past how to get comfortable with tracking these setups, identifying them in real time, which is really tricky, trading them, managing them, which is also very tricky. Which side do you fall on in terms of getting comfortable with a setup?
So there is a software I've used called SMF, or not it's a Soft Forex. It's an MT4 based software. It's god awful to use. MT4, for anyone who trades Forex, which I imagine is no one, is what people use. It's like it's your kind of your execution software. It's not the broker that you use, but your broker will plug into MT4, and MT4 is where you actually enter the trades. It's from like 1995, and they've updated it not at all because no one in Forex makes any money, I guess. So, but they have this software called Soft Forex, which actually allows you to take any pair, any currency, anything, and you can load the entirety of its data for like a year. So you could be like, I want to see all of the price action on Euro USD from 2008. And then you can look at the daily, the weekly, the minute, the monthly, everything. It will like download the price history. And so what's really cool is then you can actually live trade it with a demo account that tracks your profit and loss, that tracks your statistics.
Yeah, like we're all doing right now, right?
Yeah, exactly.
In crypto.
But you can do it obviously at speed, right? So you can have a day, you can have it play out, at 5x, 10x speed. So a day goes by in an hour, right? And then what I would do is just go through and practice trying to see this live. The problem with the TradingView replay tool, because it's effectively the same thing, is this only lets you go back so far. The issue you're going to have with backtesting strategies on Bitcoin, in my opinion, is you look at Bitcoin all day, every day for the most part. So I know all the fucking Bitcoin levels. I don't know about you, but like as soon as I open Bitcoin, I know the levels that I'm like kind of focused on. Yeah. So it's very hard to look at it objectively because you're just like, we're all programmed. This is going higher, right? We're going to 100K. There's no doubt in my mind. So it's going to be very hard for you to see any potential bearish setups because you're kind of got this bias built in onto Bitcoin. So if you want to practice this, I'd say do it on another pair. Do it on a currency or something like that you're not familiar with. So you're a little bit more unbiased about only looking for longs as opposed to shorts. But I'm a huge proponent of backtesting. And I know it sounds fucking lame and it's not what everyone wants to fucking hear. But you don't get, I can see this shit happen live because I've seen it 1,000 fucking times. It's no different than you. And you're like, oh, well, this is my key level. And people will be like, why? And you're like, oh, I don't know. I just know this is because it's a monthly blah, blah, blah. And I did a quick scan through the charts and it jumped out at me. That kind of like pattern recognition and ability to see things happen quickly, in my opinion, only comes from repetition.
Yeah, no, I agree. That's some pretty good advice. So I'm going to make the risky choice of trying to summarize some of the strategies that we've learned, and you can tell me how wrong I am. And obviously, this doesn't cover everything, and you can't just watch one YouTube video and then master something. It's the execution. Like, the execution's tricky, the trade management is tricky, like, all of that. Sitting on your hands while letting the trade play out, like, all the actual little things to do with trading, they tend to be harder than trade identification. But those are topics or videos and discussions for another time. But broadly speaking, in terms of like price action approach, I think we can go over a couple of models. Hashtag Dubai crypto. So first one is this return to the origin of impulsive moves, right? And the basic idea, as in the bullish example, is you will have a market which makes a higher high, and I've got a full video on market structure, so if you don't know what I mean by higher high, swing high, all of that type of stuff, go watch it. The basic premise is, when you identify these shifts in market structure, so significant higher highs, you want to trace them back and find out where they came from, right? Kind of archaeology, study of history, whatever. And you will often find some sort of down move, down candle, swing low, like some sort of base for this market structure shifting move. And the basic premise of this first market structure plus order block continuation setup is that when/if the market returns to this market structure shifting origin, within that area, you are A, risk defined, because below the low, that's where you're wrong. So that's good. Being risk defined in a setup knows you can define your risk, put a stop on it, know your size, etc., etc. And then the second point is, within that area, the higher time frame picture informs your lower time frame bias. So if this is, for example, a daily rectangle, within its confines, you are looking for, 15-minute, hourly, maybe even 5-minute setups to guide you in the direction of the higher time frame move. And that combination of being risk defined on a higher time frame, but being able to drill it down on a lower time frame as well, is what gives you these super asymmetric risk to reward setups. And the basic idea is you're entering on what should be a higher low if you're correct, and then your exit is either some sort of lower high structure where the move down itself came from, or if for whatever reason you're confident or there's reasons to believe it's going to go higher, you're targeting a higher high and maybe something to the left of the chart. And obviously the opposite works as well in the bearish direction, whereby you have a significant move down which breaks market structure, right? And then as the market starts to rally, you trace back where did this nuke originate from, and then a retrace into that nuke is where the same rules apply in terms of defining risk from a macro point of view, and then potentially micro if the lower timeframes allow for it. And then a quick note, a lot of the time when you measure this high to low retrace, or kind of so high to low retrace or low to high retrace as well, you'll often land somewhere between like the 618 and 786 fib or percent retracement level, and that is what you'll commonly see, I think, trader Mayne refer to as the OTE, or the optimal trade entry, right?
That's the algo doing that.
Yeah, it's not you, it's the algo.
The algo knows that you're sweating. Once it and to think of it just from like a logic perspective, like to me, right, especially when I was a beginner, when you get let's say you get in a long, right, and then price goes your way, and you're stoked, you're feeling awesome, and then it starts to dip, and it's dipping, and it's dipping, and it's dipping, and usually when are you sweating the fucking hardest, right? So let's say you got in a long somewhere near the lows here. When are you sweating the hardest that this long is no longer gonna work out? It's usually right before it fucking reverses. How many times have you been in a long, like from somewhere here, and you're stoked, and then you're like, oh shit, oh shit, oh shit, oh shit, oh fuck, we're going to zero. You close it, right? And then you wake up to this. This happens to me still to this day. Like, this is something that I still struggle with. So if you're dealing with it, like, it's totally okay. Well, usually this area of retracement is this kind of 61.8 to 78.6 zone. And the way I think of it is like, okay, where are you going to be like sweating the most that this move can't reverse from, right? Because it can reverse earlier. It can reverse from the 50. If it's a really strong trend, it might reverse from the 0.382. But to me, the idea is like, okay, where is it going to come where people are like, oh, fuck, like this is going to reverse on me. I'm fucked. I'm going to close my position. Usually it's somewhere in this area. So ICT would call it the sweet spot. But go on your chart. Every pullback in the original all-time high on the way down, I believe was between the 61.8 and the 78.6. So if you go to like the original move here, so if you take this swing to this swing, right in that.
Oh yeah, I was such a good trader back then, bro. I was just nailing all these moves.
Yeah, like so it's actually like kind of shocking, like how, right? Because it's just high enough where if you longed here, this is where you all of a sudden think we're going back to all-time high, right? And if you shorted here, this is where you think all of a sudden, okay, maybe we are going back up. I need to exit. And so just from like a psychological perspective, generally what you'll see is, right, it's like it's dipping, and it's like right when you think that you're fucked and it's going to come and run that low, that's where it puts in the higher low. And it just happens to line up with this. People always ask me what these numbers are. Why are they magic? I don't fucking know. I use the fib as like a ruler, right? It's like a measuring tool. And all I'm measuring is the length of a move or a wave. And then more often than not, you're going to get a retrace kind of into this area. ICT called it the sweet spot. You can call it whatever the hell you want, but the shit works. I don't know why it works. I mean, I'm sure ICT could explain it to you. The banks are probably dealing at these levels, which makes sense. I can imagine Goldman Sachs guys just behind their desk, just pulling the fibs.
This new crypto desk, they're watching this video right now. We
just tagged the 61.8. Fucking slam it. So it fucking works. So if you're ever wondering where that higher low might be, right? So if you're like waiting to get in a long, if you found your order block where you're like, okay, this is the move that generated this high, pull your fib from the low to the high, and you'll see more often than not that fib lines up with the order block there. Oh, you should go mute.
Yeah, that was my bad. No, I agree. It's just where stuff lines up a lot of the time, right? And that's sort of the textbook use case for confluence. If you have the break-in market structure, you've got the retrace, you've got like an order block type of structure you want to buy, plus it lands at that reasonable or for some uncomfortable retracement level, like, it's a decent spot to do business. And then to conclude the summary of the setups that we've discussed so far, those are kind of return to origin, market structure, trending condition type of stuff. And then the one we discussed about ranges was arguably just as simple or accessible. And the basic idea is when price is ranging, it's balance, right, or within balance. Often when you have especially if these ranges are identified by key swing highs or swing lows, where people are going to get emotional, panicky, maybe they have existing stops there, maybe you have automated systems being triggered on those breaks, attempted breakdowns or attempted breakouts. You want to find really obvious and key swing points, right? If they don't stick out, they're probably not very good. And the basic idea is if the market attempts to break one such structure and then fails to be accepted and then trades back within it, when it trades back within it, you're immediately risk defined by the excess high or the excess low. And then within the kind of back test of the resistance or the support, that's when you drill down to low time frames and find the structure which led to the break which failed or the breakdown which failed. And that's really where you nail down your low time frame entries, if I've understood correctly.
And you can use both of these setups at just key SR as well. Like if you're not like trying to find order blocks or demand zones, like if you think you're like, hey, this is a good level where price I think is going to reverse. Let's assume that you have, 60K was a great level, or this previous all-time high. Well, you have that return to that breaker sell happen at this all-time high. So it's not the same as and this comes with time, right? Like, okay, this was a stop run, I'm looking for the whatever. This is still a deviation. So that breaker setup can be used here. What is the move that caused the deviation? It was right here. Here's your breaker. This is the move that caused the move above this high. Once we get back below there, why can't you short that? You can, right? Your stop could be there. Your stop could be here. So you can use this at key levels. Same with the order block return to origin. Like if you have a key level here, there's an order block on a low time frame here, a bearish order block that forms in this little area of price that you're going to be able to sell into. And it works the exact same as it does when you do the kind of layering thing that I had discussed. So here's your bearish order block. There's the up move that caused the move down. There's your return to origin. There's your sell-off. And the reason you're looking for a short here is because we're bearish, thinking that we might reject that high, right? Or maybe once we break down from that high, you're selling one of the order blocks on the way down. So it doesn't have to be an order block within an order block or a run of a perfect SFP. Context is everything, right? Patterns only work if the context surrounding them are right. I can buy a return to origin of a bullish order block, but if market structure is bearish on all the higher time frames, the likelihood of that working out is way less than if so the idea is you want to stack the odds in your favor. And to do that, you need to understand the context. Context generally means, are we near a key level? What is our high time frame market structure? And then those lower time frame entry techniques, which we just went over, those are going to be high probability within those areas, right?
You can go from goodbye to goodbye pretty quickly if you're trapped on the wrong side of the higher time frames.
That's a good one. So, I mean, definitely watch these kind of things in your charts and try and identify them, but it's all going to come down to like repetition. Trader SZ said something to me one time, because this was back when I had my paid group for a while. This is so 2 years ago now. I know. Don't worry, I'm an ex paid grouper, so I'm back in the good books. But I told him, I was like, I have people coming in and stealing my shit, like as if I invented it, because I did not, right? But they would come in and they would download the videos, and then they would be posting in other Discords. And he's like, here's the thing, man. I can show people exactly how I trade. Like exactly how I trade. 99% of them will still not be able to do it, because learning to identify the pattern, right, is only one part of the puzzle. Like, sure, I can see why this, setup makes sense. Here's where you enter. Here's where your risk goes. But unless you actually know why it works, you understand the context around the setup, and then you've obviously done it hundreds and thousands of times, doesn't mean anything, right? I just showed you guys I use these setups every day. 9 out of 10 of the trades I take are those 2 exact setups. but it doesn't mean that you're going to go be able to replicate that in your chart tomorrow. It's still going to take that effort and that practice and that repetition. So that kind of made me care a whole lot less about like showing shit on Twitter and stuff. Like when I post charts, my exact reasoning to enter the trade is usually right in the chart. But you know, if people want to back test and or reverse engineer how it was done, like go ahead. But you can't replace the, you know, value of actually taking the shots yourself and doing it in your own chart, because just knowing why it works isn't enough to make it work.
Sure. Yeah, and again, like as we discussed, trade identification is just one part of it, right? There's like identifying targets and trade management and risk management.
And there's managing your fucking head when it doesn't go your way perfectly, and you're like, but it tested the order block. Why isn't it going up? I had a guy in my Discord, bless him. I posted like a gold trade for 5 likes on Twitter. Stop, entry, and target for 3R over like 5 days, and people like all the comments like, wow, Peter Schiff, boomer coin, this guy's longing LTC in gold, like what a loser. And they're probably right, but people don't really understand how, like, I think gains in Forex work. Like if I can catch a 4% move on gold, like that's really good. But regardless, stop, entry, target, nailed it. And I had some guy in my chat, I posted, I'm like, all right, closing here. He's like, how did you know that it was going to work? And I'm like, well, what do you like? How do I even answer that question? You know what I mean? Like I literally posted the entire setup. And he's like, yeah, but like it wasn't doing anything. And then like you entered, and then it went to profit. Like, how did you know? And I just thought that was so funny, right? Because you don't fucking know. Like the way I think of trading is like you're just making an educated guess, and you're using TA and other things to kind of tilt the odds in your favor a little bit. But at the end of the day, I never know if a level is going to hold, right? You don't. You hope and you pray. Like at the end of the day, the TA just kind of gives you that edge to say, okay, maybe I'll tilt the odds in my favor a little bit based on X, Y, and Z. But at the end of the day, you don't fucking know. Nobody knows.
You don't know shit. A lot of the time, if you know, at least in my system, if you know, you're too late.
Yeah,
right?
Yeah, exactly. If you're like, oh, it's for sure going up, it's like, well, that's probably because it's already.
Yeah, it's like the trade's done, the level's done its job. Like, what are you going to do? It ends up being a completely different trade, and I think a lot of people would do really well to embrace the uncertainty that comes with trading and confront it directly, as opposed to trying to avoid it by looking for like 10 different layers of confirmation, every indicator to show the same thing on every time frame, stars aligned, doji reversal candle, funding perfect, RSI over. Like, dude, shut the fuck up. Like, if you think it's a good area to trade, then trade the damn area where it makes the best sense to do so, right?
Yeah,
as opposed to waiting for like a red carpet.
You got to put your nuts on the table and just actually execute.
Yeah,
is you'll go crazy, and that's one of my problems when I was learning early on too. It was analysis by paralysis. I had all of these fucking levels. I'm like blah blah, and I never would actually just pull the trigger. And like you said earlier, sometimes you're like, I think this is a good level. You just need to bang it. And if it gives you that reaction that you want right away, awesome. And if it doesn't, like, get the fuck out.
Yeah. Don was actually really good at pushing my mind towards this, like literally a couple of years ago, because he would start entering like below support or above resistance on a high time frame. So you can imagine a weekly level, and the lower time frame, like the hourly or the 4 hour, even the daily sometimes, is like trading below it, and he starts buying it. And I'm like, dude, what the fuck are you doing? He's like, well, if I'm right, this is the wick. And I'm like, oh, okay. Well, that makes sense, right? It's like technically the best place to enter, or as close to invalidation as you're going to get if you're buying at the level. And a lot of the time, even if your idea is wrong, because your entry is so close to that structure, or like through that structure, that even if you're wrong and you get like a backside retest, you can normally get the fuck out for like break even or for a scratch, as opposed to waiting for the impulse or like trading at the level itself. So there's certainly, there are real tangible benefits to trading a level when there's less certainty in terms of the price action that's available.
Well, I do think it's funny, like people will see guys like Salsa, like Jules, and other guys who are like always catching these knives, right? These wicks, and they're like, oh my God, how did he get that wick, right? How did he long that wick? And it's the same premise to what Don is doing, but just on the low time frame. But what they don't show you is the 100 times that it didn't work, right? Where they bought the wick and then it just kept dropping, right? Yeah, but of course, the one where they did catch the wick and you're like, oh my God, this guy is the wick. How did he know? It's like they had a level, they trusted it, it went past it. They're like, okay, this is either going to hold and this is going to recoil as a wick, or it's going to keep on selling off and I'm going to get the fuck out. Something that I got a lot better at as I started trading more is exiting trades when price is not doing exactly what the fuck I want it to do. It's not something I would suggest for a newer trader. Like when you're new, my suggestion is like stop entry target, don't fucking touch it. Because when you're learning, the amount of times that you're going to exit early because you're slightly underwater, or you're going to give up profit because it went to your TP and you didn't close it yet. Like this is like the ultimate. I'll put the RR tool on to kind of demonstrate this, because this is the ultimate brain fuck, in my opinion. Is like when price, this is how you think your trade is going to go, right? Like everyone thinks you're going to get that perfect move, right? But that's not what happens. Usually what happens is this, and you're like, oh, I'm right. And then it does this. You're like, oh, fuck. Right? And then it does this. And you're like, oh, shit. And then it goes up, right? And then it goes up. But you exited here because you're a pussy, right? And you wanted to overmanage, right? And then you wake up and it's now gone from here to here. And then you re-enter and then it goes here. And then you exit and you're just fucking yourself. And the same thing goes to the upside, where it's like it comes here and then it's here. And you're like, oh, well, maybe it's going to go higher. I'm just going to hold it a little longer. And then it comes back here. And now you're like, well, I can't sell here. It was at my take profit. I need to now hold it for it to get back there. And now it's back at your entry. So what you're going to do when you're learning is you're going to mind fuck yourself out of so many trades, exiting early, holding on too long, watching that UP&L vanish. Your best bet is, the way I kind of mentally would think about it when I was learning, is as soon as I'm filled, that 1R is gone. It's either coming back as 2 or 3R, or it's gone. There's no in between. Right. So it's either coming back and I'm out. And if it goes higher, too bad. And if it gets stopped out, too bad. Like you're on to the next one. And you're going to, because there's nothing worse than seeing a trade go to profit, not closing, and then seeing it retrace all the way back, or seeing a trade almost stop you out, not quite. You close it and then it goes to target. When you get more experienced, having the ability to manage it a little more and be a little bit more kind of nimble with it, sure. But I think when you're learning, less is way more. Just like put the fucking trade on and let it ride. And if you don't trust the trade idea, why are you in it in the first place, right?
Yep, 100%. Not going to try to add any wisdom to that. That is very, very self-sufficient. Well, that brings us to a wonderful conclusion to Casual Friday. Mayne, thanks for hanging out. You're on the celebrity circuit now, following your up-only appearance. So I'm glad your agent could book us in.
Someone's like, are you promoting a book or something? It's like, I just might be. There might be a
Mayne TA tour with neck merchandise.
There might need to be some neck merchandise. The chat wasn't too bad. There's only some comments on the neck.
Yeah, we keep it somewhat on topic. I think the lack of video had to curb imaginations. Otherwise, you know how these people are. Gets pretty rowdy pretty quickly. But that's all from us. Thank you again to Mayne for his time, expertise, experience, and alpha. You feel free to, and I'd recommend you rewatch and find your own examples, and then send him all of your DMs asking if you've correctly identified the setup. He loves to answer those.
Yeah. My DMs are open. I won't answer, but I'll look at them.
Awesome. And thank you, of course, to Blockfolio, mobile trading app, ethical shilling of cryptocurrencies to your family, or at least that's what I've told myself, as well as portfolio tracking, so they can see how much to hate you day by day, week by week, month by month, or even on an annualized basis. That's all from us. Thank you for hanging out. Mayne, thanks again, and I'll see you all on Monday.
Thanks, guys.
Peace.